Hello and welcome to the TGIF trade right here in Lagos, Nigeria. We have a packed show for you. Here's what's coming up. The world's largest climate fund is supercharging its investment plans. What does this mean for the future of our planet? I will see news from Angola. Diesel prices are soaring once again with a sharp 33% hike, marking the third increase this year. And it looks like gold is poised for a major weekly gain. What's driving this surge? We'll find out later on the show. And it's great to have you join us. I'm Lottie Williams, and yeah, the markets are moving just fine at this point, but we see Brent there moving downward at this point, 0.90%, following the dip we saw earlier this morning. That's for the early trade. WTI, that's the U.S. grade, that's at $66.40 a barrel. Both there down 0.90% in the afternoon trade. And there's the upcoming OPEC Plus meeting for we're going to get more cues on production. While Iran reaffirmed its commitment to nuclear non-proliferation. So we're seeing all of that impact there for oil prices. But with what we've seen so far, it seems we might be heading for a weekly negative close there. Both benchmarks, both contracts, that were up between 1% and 2% this week, but we're nursing double-digit losses from the prior week. You know, trade was thin by the U.S. Independence holiday. That's today. But, you know, eyes still on that market at this point. Let's get a check on metals now. We're seeing gold edging up today, poised for a weekly gain as U.S. President Donald Trump's the tax cut and spending bill that passed Congress, raising, you know, fiscal concerns there. But it's a marginal gain we're seeing this afternoon. That's for spot gold. The U.S. gold futures, that's down 0.10%, but we have a more convincing upside movement there from platinum. That's 0.93% up, $1,395 there. And spot silver down 0.11%, but still not so far away from that $40 level per ounce. And we'll see if that's going to hit, you know, at some point with this trades we're seeing maybe next week. And we see Trump's tax cut legislation that cleared its final hurdle in the U.S. Congress yesterday, which will fund his immigration crackdown, make his 2017 tax cuts permanent, and deliver new tax breaks that he promised during his 2024 campaign. And we see the federal government needs to move from social investment to social protection in order to further drive its economic reforms agenda. This is according to the former country director of Give Directly, Mr. Yoka Apera. Speaking on our Business Morning program, Mr. Apera also pointed out some other measures that the current federal administration could deploy to enhance its ambitious agenda to boost Nigeria's economic growth. Take a listen.
Investment programs as it is now, it needs a complete overhaul, complete rebranding. We look at it with suspicion, we look at it with suspicion, yes, that's the right word. And you're right. So we need to move away from social investment. Just don't call it social investment. We need to move towards social protection and strengthen our social protection floors, strengthen our targeting system, rely on accurate data, build on evidence to plan and to design programs that speaks to development. We need to unlock our small enterprises by providing infrastructure that helps growth, by providing training, startups that supports small businesses to grow. The tax reform, great idea, giving tax holidays or no tax at all for those businesses that earn below a certain amount of money. And a lot of small businesses fall into this category, which is great. But tax reforms alone cannot do it for them when they don't have the requisite infrastructure to reduce cost further, like power.
All right, so see, the first half of 2025 has presented a challenging business environment, particularly with the volatile price movements of essential bread inputs and the soaring costs of doing business. I've analyzed some data showing, significant incremental costs for bread making ingredients and the impact on production there. That's definitely felt. Today, I want to dive in these pressing issues and understand how they've shaped operations for bread makers across the nation. That's for the first half of 2025. To help us unpack this, we have Engineer Emmanuel Nora as the president, Premium Bread Makers Association of Nigeria. Joining me right here in the studio. It's great to have you, sir.
Thank you, Laddie, for having me.
Yeah, it's been a while. Definitely, but definitely we must have our daily bread.
True.
At this point. And I remember, past conversations we've had. You did paint the picture of the difficulties there for bread producers, and definitely we saw that in 2024, 2023. I know it's been tough, from what we've heard so far. But looking at the first half of 2025. You did share some data, with me on, some of the price changes we've seen. And we see flavor, that's a major input there. That's moved from about 12,000 naira to 15,000. So we see a difference of about 3,000 naira. The softener, that's moved from 60,000 to 130,000 naira. Sugar, 82,000. And I guess that's a dip there to 80,000.
Yeah, there was a dip there.
Yeah, then sugar alternates, that's on the rise, at this point, and a couple of other inputs there. So break it down for me. What's your experience for the first half of 2025?
Good afternoon, viewers, and thank you, Laddie, for having me here once more. It's been quite a while.
Yeah, it's been a while.
So how you doing?
I'm okay. I'm still managing to eat bread.
Thank you for that. Thank you for that. The half year has been topsy-turvy. As you could see from the data we presented to you from the Premium Bread Makers Association of Nigeria. We had some dip in the prices. Some of them were stable. Some of the prices dropped. And I wouldn't want to experience 2024 in my life in business any longer. 2024, was mad. It was crazy. You couldn't forecast, you couldn't plan, you couldn't do anything. But thankfully, from Q3 last year, there's been some stability in the pricing, especially of our major ingredients, which is flour. Stability. We can make forecasts, we can plan, okay? It's not El Dorado. Because the price used to be like 30,000 naira, 28,000.
That's for flour.
Yeah, it rose up to 80 before it dropped and all of that. And thankfully, the president intervened. He had our cries, and there was this moratorium placed on wheat imports. The freeze or the froze VAT and wheat imports for grains. And then they brought in grains into Nigeria. It has helped us, and that helped to reduce the price of flour. Not significantly, just by 5,000 naira. But as you could see, other ingredients there held firm on their prices because of the FX rate. Yeah, though maybe oscillating between maybe 1,600 to 1,630. But there's been that stability there, so the importers can be able to plan. Except for the ports where they are telling us that these guys are killing them, the customs and their rates and all of that. And we hope that the tax reform bill can be able to take care of that with the NRS and all of it, where the FIRS or the NRS will be the ones that will be doing all of these things that the custom and all the multi-agency and MDAs are doing. So outside of that...
So that means you're optimistic about the tax reforms?
Well, we don't know the nitty-gritty of it because we are getting tax consultants to help us dissect it and look at it. You might look at it at the surface level, it may be cozy, but you don't know the nitty-gritty. What are the hidden clauses there? We don't know. So until we interrogate it in our next meeting in PBAN, that's what we want to interrogate. I want to get in an expert to come and help us drill it down for our members so that we know the nitty-gritties. Yes, CIT has reduced from 30% to 25% and all of that. Where is it hidden in the bill and all of that? But we hope it's not going to be deja vu. It's going to be a good one for us. Then coming back now, look at that data set I sent to you.
Right.
Now, all those elements that came down, energy costs wiped them out. energy costs increased from last year till now by almost about 1,000% for some of my members. Can you imagine somebody that was paying 1 million a month before? Okay, maybe say for a kilowatt hour of light and all of that, which I think 209.5. Before it used to be 60, and then they banded all of us into band A. Mm-hmm. Somebody's energy cost rose from 1 million to 15 million in a month. So it has wiped out every gain.
1 to 15 million for electricity.
1 million to 15 million. If I tell you mine, you even shout. You understand?
Wow.
Yeah, look at that. And the bad thing about this energy cost is for electricity is that they are not even giving you the lights. You don't get electricity to work with. You're still running with diesel. You're still running with LPG. You're still running with fuel in some instances. Okay? Now, diesel price dropped by about 150 there.
Yes.
Look at it, by 150.
Yeah,
Fuel
150.
dropped to oscillating between maybe 850 to 930. Let's just take it at that average rate. But the cost of energy, it's killing us. Now, for the industry, for the bread makers, you want to go and invest in solar. Do you have the initial capital, the capital layout to be able to get this going? For instance, in my association now, in PBAN, we are discussing with a company that is renowned in the world to come and help us see how we can bring down the cost of kilowatts per hour light for my members. We are on top of that now. We've done some of the analysis. So let us see whether we can lock down this energy cost in the next 10 to 15 years for our members.
I've been hearing a lot of initiatives around, that solar
that's what we're
industry, some financial services institutions, they're coming up with, plans, so you can pay, you don't have to pay the bulk sum, at this point. And we're also hearing, some initiatives coming from, the government side of things, at this point. But do you think it's that silver bullet that can help with the energy costs?
Well, until we interrogate it and drill down, you wouldn't know. Like I said, we've just finished our own analysis. You understand me? We are trying to see how we can aggregate the powers for our members, see how we can drop it by 50% for them. If we have a 50% drop, imagine a man that is doing 50 million. Maybe he's doing 6 million now a month. You can see that excess goes into he plows it back into his business, and then he can be able to be profitable in his business. So energy cost is a killer. Energy cost is a virus that is almost killing us. We just came out from one that imputes were running riots, and now energy costs. So,
because I remember our last conversation. Yeah, it was about inputs.
It was
inputs, and I don't know if energy cost was a problem that time too.
It was a cost, but it's not as bad as it is now. No. Because even if you ask the discos, how do you calculate this thing? They will tell you it's 209.5 per kilowatt hour of light, blah blah blah. And at the end of the day, what they are metering and what they are charging you is different. For instance, in my own bakery, we wrote to NEROC, FCCPC, we wrote Eco Disco. We've been on it with them for the past 3 months. They don't even answer you. You write to their customer care, they have dedicated email addresses. You write there. Ditto for all my members. That's what we've been doing, bombarding them. But there's so much arrogance there's so much arrogance with them. They don't even come back to you. How do you arrive at the cost of energy per kilowatts? Nobody tells you anything. You understand? We are just coming from one challenge and we are getting into a deeper one. So it's been...
Because I can imagine, for a household, you can, afford to, turn off lights, turn off some, equipment in the house, to manage power. But for a business,
no way.
You don't have that.
You don't have that luxury. You don't have it. See, the mixers must keep running. Okay, the extractors must keep running so that you can be able to cool the bread, because what we sell is cold bread. All right. So the whole apparatus around that, your infrastructure, they are all running, and they are running on energy. And even the light, they don't even give us the light. They don't give us the light. You're still running on your genset. Maintenance cost of diesel. Thankfully, it's been stable for a while, like I said, you understand, it's not been that 7 like it was before. I mean, we have some respite there. But energy cost is eating up everything.
So all the respite you're getting from, diesel, from input costs, going down or being stable.
Being stable. Not
being wiped out.
Wiped out
from
completely,
electricity
not
costs.
Even significantly, wiped out completely, and you are heading down south again in the business.
So how are you managing that, for your sale of bread out there?
Well, what you need to do is what you just need to upscale and try and see how you can increase your volumes without necessarily impacting your quality. Because for us, our quality is what we are known for in our association. Our quality is what drives us. You understand? You must produce with wholesome material because we have our peer review mechanism in-house and we have our own way of checkmating our members. No matter the circumstances, you cannot do it because if you do it, we have our own monitors that go around our bakeries to see what they are doing. We are the ones that will take you to our regulators. So do it, find intelligent ways. Look at your in-house, look at your operational cost and see where and where you can reduce, okay? And what, at the end of the day, what does it boil down to? You now begin to right size. First of all, staff cost, you have to look at your staff costs. Because in training, that staff cost is their meal per day, their breakfast in the morning, and all of that. And you begin to cut this whole thing. And then what does it do? It leads to staff mortality. They will not be there for you again because they will run. Some of them go to say they don't even want to work again. That's the fact now. Most of these young men and girls, they don't want to work again. They want to go into fast lane. They want to drive big cars without working. Just like
or maybe become social
enterprise.
media influencers.
Not even influencers really, but everybody, most of them just want to be on the fast lane.
But I guess it's almost like the way the birds, the way the birds operate. When they know that there's drought in one area, they try to drift to another area. So I guess they're not happy with some of the remuneration they're getting because there's a cost of living crisis,
true.
At this point.
True,
so I guess, most of the salaries can't even take them home.
I agree with you.
At this point.
I do really agree with you because what are you paying? Okay, poultry son, what are you paying them? Okay, you are doing minimum wage of say, let us even say you are doing 70,000 naira. Bro, what can 70,000 naira do for you in a month? I pity Nigerian workers, really. Sometimes I ask myself, how do these people survive? Transportation cost is, don't just even go there. If you are going from Ojota now, coming to Surulere, and it rains now, maybe they will say 5,000 or even 10,000 per drop. You understand? So, and the government does not have the right transport infrastructure to push
some of those safety nets that could help out.
You understand? So it's the Nigerian worker is in a bad place because inflation that has eaten virtually everything that they pay him or her. Of course, it used to be 40-something. They rebased it. Even at that, it's still hovering above 20-something percentile. Food inflation is above 21% for food inflation. Despite the rebasing, okay, inflation is about 22.97 if May, because MBS has not gotten us
we don't have the
data for June.
Report, yes.
It will soon be out by MBS. So, and you look at the MPI and everything. So everything is weighed against the workers. So all of them are looking
and talking about being weighed against the workers, how would you gauge, consumer sentiment, for the first half? Do you think the Nigerian consumer has been resilient, when it comes to, buying bread? Or have they moved to other substitutes?
There are no substitute that is better than bread, but that is cheaper. Bread is a grab and go.
Or maybe there's no substitute, you just stop it, you just cut consumption.
Certainly, they do that. But in doing that, as a smart businessman, you have to look at where to get the money from their pockets from. You understand? Maybe, for instance, in my bakery, you have maybe 15 SKUs or 12 SKUs, okay, so like variants. Okay, then you look at it. This 2,000 bread, can they afford it now? Can they afford 1,009? Then you tend to say, okay, can we begin to reduce it? Maybe do a 500 naira, 600 pack size so that they can be able to afford it. All right? At the end of the day, for you, what is very important is your flour count and your throughput. Okay? So you must study your terrain, you must study your business. And that is what we represent in PBAN, because we run businesses there. You have your business analyst and you have your business development people. They are always on their system trying to see, they will move with the trend of the market so that at the end of the day, you are not out of business. You can be able to run your overhead and be able to pay salaries and remain afloat without being profitable, really.
Right. So I guess at this point we've seen other companies try to cut or reduce the size of some of their products and have some sachet prices. At this point, are we seeing that happening there?
No, it's not. It's
maybe you're selling a slice now. Is it going to get?
Let me tell you, the danger in reduction in your pack size. The danger in it is your mold, your pan size is fixed. The cost of it you can't even do now. Okay, so once you have a dough that will fit that particular bread pan, all right, if you touch it, you compromise the integrity of that bread. You have what we call B and D, bad and damaged bread. Okay, and for instance, you have a bag of maybe 50 loaves, all right, and you go and tamper with your weight. Maybe you are doing 800 grams, and you tamper it about 750 with the hope of trying to gain that 50. You will lose it. Eventually, you will just get maybe 20-30% of the 100% you are supposed to get, your yield. So you put it in the oven, it cannot spring. Sometimes even the yeast activities, the bacteria in the yeast that is working on the dough will not even allow it to rise very well. There's what we call oven spring. The bread must proof, touch the lid of the pan as soon as you put it into the oven. Okay, as the furnace is blasting, it just go poof. The bread springs into the and takes the shape of the pan.
Yeah.
And the pan, understand. And then from there it begins to cook.
Yeah.
Until you get a good cook. But if you go and cut corners, as it proves, it will just sink down immediately. So that's your loss. And you're going to sell it at maybe 30% the rate of, maybe something you're supposed to sell 1,000 naira. At the end, because it is bad and damaged, you have to sell it 300 naira. So who loses at the end of the day? So you have to be intelligent in bread making. Bread making is an art, it's a craft, it's a science.
Right.
If you don't understand the nitty-gritties and intricacies of it, you just do it because you want to do. Blow. You'll be out of business in no time.
Right.
So
I think I've tried my hand at home baking before. It's definitely not easy.
You want to delve into our terrain.
No, just for home consumption. Maybe make a little cake or something. But it's definitely not easy. And at this point, from what you've said so far, you did say all the gains from the inputs costs being stable or even lower. Energy cost is wiping all of that out. What are you saying now to the government at this point? How do you think the second half is going to continue looking? Since we're seeing the problems we saw in the first half continuing to
the problem has been taken care of in one hand, and on the other hand, it's been wiped out completely.
Reduce energy costs and everything will be good.
Not only reducing energy costs, okay, you reduce energy costs is significant, and like the World Bank, I think they projected 3.6%. Rise in the economy or whatever. GDP, sorry.
Right.
They said we are doing about 3.7 half year gone. I think it's 3.7 or 3.6.
Yeah, that's from the PMI data we recently got.
The one we got from
right.
The one they got from, is in Stanbic Bank?
Stanbic, yes.
Okay.
NESG Stanbic,
yeah, right. So you understand. Let's hope that the second quarter we hold as it is now. Okay, even if you are not going to go down south, remain where you are, so that businesses can do what? Forecast. Because businesses thrive on forecast. If you cannot forecast business, you are a blind man. So government, let them hold, let what we are doing hold, let the FX, if it is not even going to,
strengthen.
For me, if it's not going to strengthen, I want it strengthened.
Yeah.
Maybe fair value should be like 1,000 naira, but are we that productive to be able to allow us to get that?
Right.
No, so I'm a realist. So if we can be able to hover between 1,000 to 1,003, then look at other indicators in the economy. This energy is not peculiar to the bread making industry.
It's everywhere.
It's everywhere.
Cuts across.
Everybody is looking at ways to see how we can reduce energy costs. You understand? And people are putting on their thinking cap. Let me tell you the truth. And very soon, if they are not careful, they may not even see people that will come and buy their energy, because we are buying it. That's the discourse.
So at some point you see a cut in demand for energy.
It will certainly get there. Thankfully, the president has signed the bill. The state governments are going to come with their own. People are going to go off grid, off national grid. People are going to be, what do they call it? Aggregate power, like I and you can aggregate the power. Okay, we produce it ourselves.
Produce our own power.
Our own power and generate it. Lagos State is doing it, and I think they do it 1 megawatt IPP at the state house in Marina or somewhere. So people are going to begin to do that, and at the end of the day, it's going to be the discourse loss, because they are stifling us. They don't want people to breathe. But nature abhors vacuum. We are going to find a way to survive it.
Right, and I think I've spoken with some of the spokespersons for most of the discourse, and they also complain of they have their own issues at this point.
Everybody keeps complaining.
Keeping them from actually maybe giving us affordable prices. For
now everybody keeps complaining. Everybody keeps complaining. It's a deja vu for everybody. But some people
maybe the domino effect.
Some people are having. holding the shorter end of the stick. Especially for manufacturers, to be a producing company in Nigeria, it's not easy. You grow gray hairs, your BP will spike. Sometimes you will be talking and walking because you don't know where to pay salaries from. You understand? I'm a petroleum engineer. I'm a petroleum engineer by training. I worked in the oil and gas for 24 years before by choice I became a baker. So I will tell you, I worked in the upstream. I'm a petroleum engineer.
You know how it functions.
So I know how it functions. So let them not tell us what they are telling us there. You understand me? They are making a kill. They are making a kill. The discos are making a kill. And they are not giving us the energy we need to run the wheels of our industries. You know, so that's where the government need to look. As we get into the second half of the year, they have to look at that. And then we are pleading to Mr. President and the government, please, you gave us that security of that removal of the VAT.
VAT, right.
Yeah, and import duty on wheat. I think that should continue. He should not listen to anybody. People are beginning to put pressure, pie pressure. He shouldn't. Nigerians must eat. Because if people don't eat, you exacerbate insecurity. Currently, we are facing a lot of challenges in almost all the 6 geopolitical zones. And you don't want a hungry population. You understand? If a hungry population, they are hungry. Don't make it worse. Because if you make it worse, what do? People will take to self-help. And it's not going to be good for anybody.
No, we don't need it. We
don't need any self-help. So that is why, as an industry, we are doing our utmost to ensure that there is bread for Nigerians at affordable prices. Like, we have 13 SKUs, okay, ranging from 2,100, all right, to 300 naira. So you must fall in somewhere there. And the breads are nutritious with the right elements of vitamins that can keep you full for the day. That's what we stand for in my association. So you must fall in there.
Right.
If you cannot buy this, your money must reach to buy one at least.
All right. Definitely, we're hoping for the best, in this second half and even the years to come. Thank you so much, Engineer Emmanuel Onora, President, Premium Bread Makers Association of Nigeria. Thank you for coming on
My
today.
pleasure as always. Thank you, Channels.
All right, we'll take a break now. When we come back, we head straight to the markets there. Anita will bring us up to speed on who's making money and who's not. That's in a moment. Just stay with us. All right, let's head straight to the markets now. Have Anita with the details for the TGIF trade. Anita, thank God it's Friday in the second half of 2025. I think the markets are not looking bad.
Well, that's at the same time, it's the final week of the first trading
week
of July.
July, yeah.
Exactly. So within just 4 trading days of July, I must say that the market is still in a kind of a recovery mode because it started the month of July. I think it was in the red about 2 days, then made a brief recovery, which was about up from the 119,000 points, so was able to sustain the 120.
Yeah, reclaiming that 120,000 level.
Exactly. And I'm sure it's going to, it's expected to climb higher, but at the moment, it's not really that optimistic.
Right.
Yeah, but
let's
talk about the bigger picture.
Profit-taking, at some point,
exactly.
That might play into the game.
Exactly. Because investors there, they're not going to take a last-minute decision and let others, take the decision of profit-taking before them. But at the same time, some might just have this wait and see because it's the start of the month. So
like
next
do
week
nothing. Just do nothing.
Exactly,
just watch
do nothing.
The market.
But so far, we've seen that the month of May and June were back-to-back good months, with June being so far the best months. But what July holds in stock, we'll see a clearer picture as from next week when we begin to see the first half of the year result as well as the second quarter result come into play. So that's what
so much data to look out for.
Exactly, and data is always what we give so that the investors know what decision to make as far as investments are concerned. All right, so let's talk about the markets at intraday. These are the numbers that we had about almost 2 hours ago. 0.02% in the red. That's Nigeria's stock market. Was able to get back into the 120,000 index level, which was rather higher if you see this number here. So, but as we speak now, the market is currently in a mixed note. So we see that the market not really be doing too well because we see pockets of profit taking there. Industrial goods is down by about 100 basis points. Insurance is also down by 31 basis points. Oil and gas, 37 basis points. This is just a couple of minutes ago that we have this report. While the banking sector, as well as the consumer goods, they were trading a bit of a flattish at intraday. But so far, the market is up by about 16.92%, very, very in the positive terrain, and just half of the year. So we will be looking out for Nigeria's stock market to still remain among the top 10 or top 20 for 2025, but that's still about some 180 days away from the final numbers that we'll be expecting from the market. So for the Johannesburg Stock Exchange, we've been talking about the Johannesburg Stock Exchange All-Share Index. This is the number which is almost close to the 97,000 index level. These are the two that are just racing up into the hundreds. We expect that this number will be climbing higher, just a few threads away from the 97,000 index level. Lots of bargain hunting driving the Johannesburg Stock Exchange's All-Share Index, the benchmark index of stocks performance there in the green at intraday, poised for a positive close for Friday. And for the EGX and the Nairobi Stock Exchange All-Share Index, we're talking about African markets doing pretty well. Kenya, at the close of Thursday's trading session, doing pretty well. Previously, we saw the market closing up 2%. That was on Wednesday, where we reported on Thursday that the market gained about 2%. But for the close of Thursday's trading session, Nairobi Stock Exchange All-Share Index was up 1.44%. And take a look at the number here, all the way from the 100, 120, 140 into the 160.13. But still, when you look at the other numbers, take a look at for EGX 30, 32,820.49. That was up by 0.35% at intraday. So that's a snapshot of the performance of major African stock markets for intraday and for the Nairobi Stock Exchange. That's for the close of Thursday's trading session. So that's it for the equities market. Now, for Friday, we're talking in-depthly about the fixed income markets, and not just the fixed income market, but as well as the Forex market. So we have a review of the market's performance for the first week of July, and what to expect in the second week of July. And we have Caleb Alimi, Chief Dealer with Providence Bank, to give us details about that. Thank you for joining us, Caleb.
My pleasure, Anita. Good afternoon.
Okay, so I know that there was the markets, particularly the fixed income market, it was able to sustain a bullish run in between. That's for the treasury bills as well as the bonds market. But give us some highlights of what really happened. Why do we see this bullish trend on the fixed income and the bonds on the treasury bills and the bonds markets?
Thank you very much, Anita. So what we're seeing in the fixed income markets is reduced supply. And that is what is leading to the run or to the bullish run that we're seeing. For example, in the treasury bill space, if we look at the auction, the primary auction in the month of May versus the primary auction in the month of June, we could see that in the month of May, the DMO offered and sold 1.2 trillion, but in the month of June, they sold only 612 billion. Right, and we also saw interest rates dropping from around 19.35 to around 18.8%. You know, what we've seen is a reduced supply. Also, we didn't have an auction this week. The auction, which should have ordinarily happened this week, has been, scheduled to happen next week. And so we're expecting that what we're seeing from the DMO is, a bit of appetite for less and less borrowing. That's why we're seeing demand. And the market has actually been awash with a bit of liquidity. And that's why we see all of those funds are chasing the few securities that are available. In the month of July so far, we've also seen, the bullish run sustained in the secondary markets. We think that may continue, except barring what we see that the DMO will supply next week. For the treasury bill space, where we expect an auction, we have a maturity of around 300 billion. We think they should roll over all of that. But if they don't, if they issue, say, like 100 billion, then it will strengthen the bullish run. But if they issue like a 300 billion, then bullish run could sort of like taper off. And then in the bond space as well, we also saw reduced supply from the previous auction where they sold, from the auction in May where they sold, almost 300 billion to the auction in June where they sold just 100 billion. So all of those just point to the fact that the DMO seems to be tapering down its borrowing appetite, and thus investors are scrambling for what were, formerly high yields, and then they're dragging down those yields. We also saw between the month of May and the month of June, the stop rates on the bonds markets for the longest tenors that were issued. We saw one move from 18.98 to 17.75, about 120 basis point down. And then another one moved from 19.85 to almost 17.95, almost 200 basis points, drop there. And then, those yields have been strengthened further, or that run has been strengthened further in the secondary market on the back of the fact that there's just reduced supply. So we're looking up to the auction calendar for the rest of the quarter three and quarter four, really. We think that for the bond market, the DMO will probably continue to issue, say, like 100 billion, except there is a change in appetite, which, of course, we would come to know in the coming days. And for the treasury bills as well, we think they're going to, stay around the 200 to 300 billion auction size.
Okay, so now we've talked about the fixed income market. Let's talk about the foreign exchange market. We have it here, the CBN, the central bank's most recent quarterly statistical bulletin, that's the QSB, shows that the total foreign exchange inflows was up by about 70% quarter on quarter, 78% year to date, and that was for the fourth quarter of 2024 at about $27.7 billion. Now, so far this week, how has the Forex market performed in terms of the inflows, the transactions there, and what's the sentiment, and then also the Forex level, what are we expected to see for the foreign exchange, for the Forex reserves?
Yeah, well, what we see from the FX market has been a large strengthening of the Naira against the dollar. This time last month, the Naira against the dollar was exchanging for around 1585. However, today, the Naira exchanging for dollar at 1530. So this week we've also seen it strengthening further from around 1550 that we started the week to around 1530, in the official market. Also, we're hearing that on the streets, there's also a lot of appreciation going on there. And that testament to that is also that we're having a lot of FPIs, which you just said, the CBN publishing is in its statistical bulletin. You'd also see that impact in the stock market as well. If you saw the stock market report, you could see that there's a lot more foreign portfolio investors play in that market. So we're seeing a lot of influx of dollars come to chase our beautiful yields or our relatively high yields. And that's why the Naira is strengthening against the dollar. Will this continue? Well, as long as the yields remain still attractive, we think they'll continue to come in. What we've seen month on month is just about a 4% appreciation in the Naira against the dollar. We don't think it's enough for FPIs to begin to, exit, which means many of them came in around 1570, between 1550 to 1570, and then the currency is now around 1530. So it's not strong enough for them to begin to repatriate their funds. They want to benefit from the yields in the fixed income market. Also, they want to benefit from possible returns in the capital market. So we think the Naira may continue to strengthen or will stay around these rates. We're looking forward to it dropping to around 1500. I think that'll be a very good level for the currency.
I just can't wait to see the Naira go maybe even below the 1,500 level, because to some people they'll tell you that the Naira is still trading really, really low against the dollar. But thank you so much for that optimism on the Forex market as well as the fixed income market, Caleb.
Thank you for having me, Anita.
That's Caleb Alimi, Chief Dealer with Providence Bank, giving us details of the Forex and the fixed income markets for Friday, the expectations as well as the review for the first week of July. Okay, let's talk about the Middle Eastern market. Middle Eastern markets, these are the only two trading at intraday, and we see that the impact of falling oil prices is having like an imprint on the Dubai and the Abu Dhabi index. At some point, this market was in the red. But I'm sure that number is still in the red, but it's just been oscillating, changing minute by minute. But so far, the impact of that, first of all, crude oil prices, and they're declining ahead of a planned restart of U.S.-Iran nuclear talks, as well as OPEC, which will be meeting on Sunday and is expected to announce an increase of about 411,000 barrels of production for crude oil for the month of August. And that's, of course, is also coming amidst oversupply concerns, which has made the prices of oil to go under pressure. So that is also reflecting on the markets within the Middle Eastern region, particularly on these two markets, the Abu Dhabi and the Dubai index. Well, let's take a look at the close of Thursday for Saudi Arabia and Qatari stock exchanges. They were in the green for the close of Thursday's trading session. They always close on Thursday, and they would resume on Sunday. But so far, for the close of the week, last trading day, which was on Thursday, the Tadu was up 1.03%. The Qatari stock exchange up more than 0.5%, 10,000, while this is 11,000 above. So that's it for the market at intraday and for the close of Thursday's trading session on the Middle East. All right, so we take our boat, if it's a boat, we take it down to the United States. Well, actually, the United States is observing its 249th independence since they broke away, since they declared independence from Britain sometime in 1776. That's about almost 250 years ago. So, but the market, the futures were in the red, and this is coming after both the S&P and the NASDAQ had posted some record gains. And this is also coming after a better than expected jobs report, which shows that the jobs were higher at almost much better than expected, as well as we also saw that more like a conflicting report. The ADP jobs report, we had two jobs reports from the world's biggest economy, one suggesting that there was a drop, while the other suggesting that it was a better than expected performance for the jobs for the labor market. But let's get a closer report about the U.S. market for the close of Thursday's trading session, and our U.S. Washington correspondent Maria Bird has details of that.
The U.S. stock market inched up higher on Thursday as the Dow Jones was up at 0.7%, the S&P 500 up at 0.8%, and the heavy tech NASDAQ was also up at 1%. As many investors were excited to see the gains on the day, but many are not hopeful that we could see interest rate cuts anytime soon, as the jobs reports were released and they were much higher than expected. Over 147,000 jobs added in the month of June versus what was expected to be 106,000 jobs. The U.S. economy is looking much stronger than expected, and there are some gains that are being watched over the next few days and weeks ahead.
That was our Washington correspondent, Maria Bird, giving us an overview. Markets closed before the Independence Day holiday currently for today. So, Ladi, I would have given you, I know that we're out of time, but this is how
Independence Day in the U.S. Are you going to go back and watch the movie by Will Smith?
Yeah, I would say that's a classic. It was released sometime almost about 30 years ago. Independence Day. That's about 1998. I guess I'm going to watch it.
About 30 years old now.
Honestly, that movie is almost 30 years for Nighttime Flies.
Quite a classic. I'll try and watch it too.
Classic.
Thank you so much, Nathan, there for giving us the TGIF trade for today. But let's take it on to Europe now. We have Lars Holter standing by there. Great to have you, Lars. I'm sure you're in also the TGIF mood at this time. What are investors looking at?
Well, you know, Ladi, they're not looking at much because I told you yesterday already that all eyes here in Europe, not only in Germany, but pretty much across the markets here, are so on the US these days. Main topics for investors there, of course, is ongoing trade debacle and that big, beautiful bill that will now be signed today by President Trump. Now, the problem is, as you just discussed, of course, Independence Day markets closed there, so you don't get any market reactions out of the US. And that means, absent of news here, that markets in Europe are not having much to cling to because there's really not that much news breaking here. It's been a very, very weak week here in this regard, very weak in news. So we are right now seeing all the big indices in Europe down. We're seeing the FTSE down only by about 0.25%. The CAC 40 in Paris is down by more than 1% at this point. And the DAX in Frankfurt right around in the middle here, losing about 0.7% right now.
So looking at the German economy, you know, high energy costs has been a problem, you know, for a long time. But now there's some relief coming. What can you tell us about these developments?
Yeah, Ladi, let's start with the problem that we've been having for years. Germany has long received much of its energy supplies from Russia, natural gas, and when Russia began its war against Ukraine, those deliveries were stopped. Russia got sanctioned, and Germany was scrambling to replace its supplies. And then energy costs, of course, skyrocketed, and they have remained high ever since. And those high energy prices are indeed the main reason why the economy has been weak, with 2 years in recession and even this third year in a row now being expected relatively weak. Now, lowering energy prices was a goal for the new government, which has been in place now for a little over 2 months, and they acted pretty fast, cutting energy taxes for businesses drastically. It was great news for some that are using tremendous amounts of energy. That would be the steel sector, for example, or chemicals, materials. But looking at the fine print, it became clear now pretty fast who will not see any relief, and it was just now confirmed. And there will be smaller businesses and citizens. And even though it's been clear that consumers need help just as much as, of course, the corporate giants.
So why has the government decided against helping out consumers at the same levels they're helping out businesses? Because some might say the businesses might have it better than the consumers.
Definitely, Ladi, it's a huge problem. The government says it's all about the money. They simply don't have enough. And this is not untrue. As a matter of fact, the government has been spending wildly in the past, and we've talked about here quite a bit. Technically, there would be many reasons to stop spending. In fact, one member of the coalition said, at least we're not spending money we don't have. That sounds good, but cutting energy taxes for all consumers would have cost the government 5.5 billion euros. And that is, yes, a lot of money in one way, but it's a pittance compared to what the government is actually spending. They just upended the debt brake in an effort to up investment. They're putting 500 billion euros into the military, partially to fulfill Germany's obligations to NATO, of course. They're putting another 500 billion euros into infrastructure. Now, that's an investment package specifically meant to boost the economy, to get the country out of its doldrum. And it comes with other measures, too, to support businesses. So there's been a lot of help for large companies, but the consumer is also a major player in the economy. And it would have been prudent to invest into some consumer relief as well, and especially, of course, given the numbers thrown around elsewhere in the budget.
All right, thank you so much, Lars, there for breaking it down for us, and enjoy the weekend, at this point.
You too, Ladi. Thank you very much.
Thank you. All right, so let's look at other stories now. Looking at Southern Africa, we see the rand that inched up against the weaker dollar in early trade today as traders considered the impact of a sweeping tax cut and spending bill U.S. President Donald Trump is about to sign into law, and as pressure mounted on countries to secure trade deals before the United States July 9th deadline. So we see that appreciation there. Also, we see as July 9th approaches, economists and industry experts have expressed serious concern about the potential consequences of the expiry of U.S. President Donald Trump's 90-day pause on tariff increases affecting South Africa and other countries. Following the promise of a 10% universal tariff, there's a looming threat of substantial tariffs rising to an alarming 30% if a deal is not reached by the impending deadline. This situation sends ripples of uncertainty among South African exporters who rely heavily on the U.S. market for their products. We see Wandile Shilobo, the chief economist at Agricultural Business Chamber of South Africa. He highlighted the ongoing negotiations between South African businesses and U.S. authorities, but noted the prevailing ambiguity regarding future trade terms. And Angola's energy landscape is undergoing a significant shift as authorities adjust fuel prices yet again. Effective immediately, diesel prices have risen by 1/3 from approximately 300 kwanzas under the previous benchmark to 400 kwanzas per litre, and this marks the third of such increase in 2025 alone. The move reflects ongoing efforts by the Angolan government to reduce fuel subsidies, a campaign partially driven by pressure from international financial institutions, such as the International Monetary Fund. Early in the year, similar increases helped bring diesel costs to roughly 300 kwanzas, following a roughly 50% increase earlier in the year. And in a significant development for Africa's infrastructure landscape, the African Development Bank and the Asia Infrastructure Investment Bank have renewed their strategic partnership. The deal, formalized on June 28th in Paris during the Heads of Multilateral Development Banks meeting, cements cooperation in 6 focus areas: green infrastructure, industrialization, private capital mobilization, cross-border connectivity, digitalization, and policy-based financing. Under the fresh Memorandum of Understanding by joint efforts through co-financing and co-guarantees and other collaborative instruments aimed at accelerating sustainable economic development across the continent. I will see the world's biggest multilateral climate fund said it will make its largest ever series of investments and speed up deal making as it looks to help poor nations respond to global warming. The Green Climate Fund plans to release about $1.2 billion for 17 projects, mostly in Asia and Africa, and follows approval by shareholders, including the United States, at a meeting this week against a fractious political backdrop that has seen development aid slashed. Official development assistance would fall 17% this year after a 9% drop in 2024. The OECD said in June a report there, and it is led by hefty cuts to U.S. aid by President Donald Trump. And in a landmark announcement at the Ivory Tech Forum 2025, Côte d'Ivoire has unveiled the launch of a new technological innovation fund backed by FCFA, 100 billion to drive digital transformation, support local innovation under the banner Ivory Coast Digital Crossroads. The initiative positions the West African nation as a regional tech hub and reaffirms its commitment to building a resilient, knowledge-based economy. All right, we'll take a very quick break now. When we come back, we're going to unpack some things right here in the crypto market. Do stay with us. That's in a moment. All right, so we see it's right on the screen there. Bitcoin, yeah, losing that 110,000 level. Not able to get above it at this point. Maybe some stories might get it above that, but it's mostly red at this point. With Ethereum down 1.38% from the last track we got for the markets at this point, and from Coin360. XRP, that's down 2.19%. And we see hype also in the red. And the stablecoin, the USDE, that's looking green at this point. They're showing that some investors could be trying to get some stability with their portfolios, getting into the stablecoins. Let's look at some headlines now. A long dormant Bitcoin address, the Satoshi era address, that has come online at this point. And definitely those Satoshi addresses are addresses that were created a long time ago towards the Satoshi era. Remember, we hear Bitcoin was created by Satoshi Nakamoto, with some codes there. So we're seeing that address there coming online, and it has quite a lot of money in there. It's worth approximately $1.09 billion at the time of transfer. That's about 10,000 Bitcoins. Remember the pizza story there with that guy there paying for a pizza with about 10,000 Bitcoins. So that would have been worth about $1 billion right now. That went for pizza. And then we see Pakistan's ambitious plan to allocate surplus electricity towards cryptocurrency mining. We're seeing the IMF there warning against that. They've pushed back against that proposal, raising concerns about the lack of prior consultation and its implications for the country's financial stability there. We see, most countries now trying to see how they can position as a leader, when it comes to, the cryptocurrency and digital assets at this point when it comes to mining and other parts. And, right here in Nigeria, there's so much conversations going on now about decentralization. There's also talk about how asset managers can get educated on how to have that handshake between cryptocurrency, the markets there, and also how the investors can get on plugging into Bitcoin. Since we see Bitcoin now is a security right here in Nigeria. So that's the show today. Definitely we'll bring you more next week. It's a TGIF trade right here. Hopefully your portfolio is in the green. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.